In this video, we're diving deep into one of India's leading chemical and fertilizer company, Deepak Fertilizers and Petrochemicals Limited. We'll cover its business model, financial strength, growth plans, and whether this stock is a good investment right now. Stay tuned till the end for our investment view and technical outlook. Welcome to NextGen Investors, let's begin. Company Overview. Deepak Fertilizers and Petrochemicals Corporation Ltd, DFPCL, is a diversified Indian manufacturer engaged in two key segments. Agricultural fertilizers, under the Monsoon brand. Industrial chemicals like nitric acid, methanol, isopropyl alcohol, IPA, and technical ammonium nitrate, TAN. It's also the only Indian producer of prilled ammonium nitrate and medical-grade AN, and a market leader in IPA and NP 2400 hours 24 fertilizer. Plus, they operate a real estate asset, Creativity Mall in Pune. Let's move into their qualitative strengths. Qualitative analysis. Diversified business model, servicing both agriculture and industries. Market leadership, nearly 40% market share in TAN, monopoly in prilled AN. Backward integration, commissioned their ammonia plant in FY24, reducing import dependence. Shift to specialty chemicals, focusing on high-margin segments like pharma-grade IPA and solar-grade nitric acid. Strong leadership, led by Sailesh Mehta, continuing the founder's legacy with long-term strategy. Quantitative analysis. Let's look at key financials for FY25. Revenue, 10,355 Indian rupees crore, up nearly 18% YOY. Net profit, 945 Indian rupees crore, 111% profit growth. Operating margin, 15.6%, net margin, 9.1%. Debt to equity, only 0.10, showing a strong balance sheet. Interest coverage, 11.5 times, excellent liquidity. EPS, 74 Indian rupees, book value, 494 Indian rupees. P/E ratio, 21, price to book, 3.3, not cheap, but not extreme. ROE, 16%, ROS, 13%. Free cash flow, 763 Indian rupees crore. These figures show strong profitability and low leverage, signs of a fundamentally sound business. Pros. Diversified revenue base, reduces risk. Strong market positioning, especially in TAN and IPA. Backward integration adds cost efficiency. Healthy balance sheet, low debt. Cash flows are stable and strong. Growth-focused, expanding into specialty and value-added segments. Cons. Sensitive to monsoon patterns, fertilizer demand depends on rainfall. Exposure to commodity price volatility, especially natural gas. Regulatory dependency, fertilizer subsidies and price caps can affect margins. High valuation, P/E over 21 might not offer a big margin of safety. Upcoming capex, large debt-funded expansions may add financial pressure. Intense competition from global and domestic players. Monsoon impact 2025. Good news, monsoon 2025 is forecast to be normal to above normal, which is positive for crop yield and fertilizer demand. This should boost DFPCL sales in Q2 and Q3. But if there are regional floods or policy changes in subsidies, the short-term sentiment can turn volatile. Order book and customers. While DFPCL doesn't publish a traditional order book, their sales are recurring and volume-driven, especially in fertilizers and chemicals. Key customers include farmers using the Monsoon brand, pharma and sanitizer makers for IPA, mining and infrastructure players for TAN, industrial users for ammonia, methanol, nitric acid, real estate clients at Creativity Mall. This wide customer base ensures steady, repeat business. Technical view and our opinion. Technically, we feel the stock has run up sharply from 600 Indian rupees to 1,500 Indian rupees plus recently. Currently trading near 1,567 Indian rupees with a P/E of 21 plus, it's not a good entry point for value investors. Our view, wait for a dip. If you're looking for long-term investment, add it to your watch list. Wait for a price near or below the Graham number, Indian rupee 900 and 950. Accumulate slowly if it dips during market correction or sector weakness. Deepak Fertilizers is fundamentally strong, but price matters. In summary, strong business, diversified product mix, clear leadership and expansion roadmap. But not cheap at current levels. Short-term risks from monsoon and input costs exist. So keep your eyes open, the next dip could be your best entry. Disclaimer: this video is for educational purposes only. It is not investment advice or a stock recommendation. Please consult a SEBI-registered financial advisor before making any investment decision. Stock prices and market conditions may change. Do your own research. Thanks for watching. Like, share, and subscribe to NextGen Investors. Drop your thoughts or questions in the comments.